share one of my favorite tricks. Hopefully, this is still there. If not, let's talk about the differences in life insurance, right? There's only two real types of life insurance. All the other stuff that we're hearing is based off of the features and benefits that life insurance provides. The first type is term life. The second is permanent life. Okay. When we look at term life insurance, we get it hoping we don't have to use it. It's like car insurance. Only 1% of term life that is given out is actually cashed in. It either expires or we outlive it. Because we get it in hopes that we no longer have to use it. So when we go back and look at the four categories of need, with that first category being final expense, that second category being our primary home, covering either the mortgage or the value, that third category being our children, education, the Head Start, and the wealth transfer. And that final category being income protection. When we look at our needs in each of these categories, we would get term for the mortgage. We're not going to have a mortgage forever, right? Our mortgage is only 30 years, 20 years, 15 years, whatever that is. So we would get term insurance to cover the term of the mortgage, because after the mortgage is paid off, we wouldn't need to cover that specific aspect of our asset anymore. We would get term insurance to cover income protection. Because again, when we reach the age of retirement, the hope is that we have a pension or we have a 401k, 403b, Roth IRAs. We've accumulated retirement assets that is going to be coming into the household whether we're still here or not. So we just need to cover an asset for a period of time. And that's where term insurance comes in. Children's education. We're getting term insurance to cover our child's education in case we aren't here to cover it ourselves. Now, let's talk about permanent insurance. You may have heard of IULs, which is Index Universal Life, VULs, Variable Universal Life, Guarantee IULs, which is Guarantee Index Universal, or Guarantee Whole Life Insurance. All of these different types of insurances, they're all permanent insurance. What they all have in common is that they're going to build some type of cash value inside of that policy. And the title of that insurance is telling you how the cash value is being built. So if it's connected by an IUL, Index Universal Life, it means your cash value growth is connected to a specific index, and the production of that index and the performance of that index will determine how your money grows inside of that policy. If you have a variable universal life policy, you have more flexibility to use things like mutual funds, exchange traded funds, and different customized portfolios. And based on the performance of those portfolios, that's how your money is going to grow inside of that policy. And then you have guaranteed whole life insurance, where you have a guaranteed interest rate, and depending on the company, there may be dividends that is attached to the growth as if you were a stakeholder of that company by which your life insurance contract is with. So when we think about the need for permanent insurance, one thing that's guaranteed: life, death, and taxes, right? So we know at some point we're going to transition. So we would need permanent insurance. Let me see if I can change the color here. Change that to green. We would need permanent insurance for final expense, right? We would need permanent insurance to create a head start for our child, because we need some type of policy that builds cash value, because we're going to use the cash value to be able to give a head start to our children. If we want to leave and transfer wealth, that's permanent insurance, because we know that's the number that we want to leave behind for our family no matter when we die. We would need permanent insurance if we want to protect and create an efficient estate plan when it comes to our home as an asset, ensuring that our heirs can make quick, efficient decisions upon our transition. So when we look at identifying and analyzing our primary need for life insurance, it also shows us where and how the different types of life insurance can be utilized. So when I'm asked a question like, Rashawn, can I have multiple policies, life insurance policies? Absolutely. You should have multiple life insurance policies. You should have a combination of both, especially in a family where married couple with a child that's 10 years old, right? So hopefully that gives an understanding of, one, what life insurance is, how it can be used for you and your family, and the differences between the two. Does that help?
Yes.
Yes.
Awesome.